Hey, hello everyone. Excuse me. Glad you could be here for this weekly live stream. Quick check who's here. Pablo Pina, how you doing? Peter Frowine, how you doing? Oh, let's see. Right off the bat, since 1913, the Fed has stolen 98% of our wealth, and the Fed now. Peter Frowine, he ain't playing. He's not playing. I'm looking forward to this episode of Jerome Powell bringing on the pain. Seymour Rivers. Yeah. What I'm going to be doing is just taking a look at a few clips that came out last week when the Fed did raise the interest rates, and this is more reactionary. So, I'd like to get your excuse me, your opinions on things for sure, and kind of seeing, with what he's trying to do, where exactly are we headed? Because it is definitely in a place of pain that we are going to be headed to. So we'll talk about those things. So again, it's mostly reactionary to what he's done. The Mick, aloha, how you doing? Chris Primer, how you doing? So I'll be with you guys shortly. Before that, before the main topic, we're going to take a look at a few things Craig Hemke had said, and we're going to take a look at a couple items from Gerald Talente's Trends Journal. So those will start it off, and then we'll work our way to the topic of the day, Jerome Powell bringing on the pain. So I'll be with you guys shortly. If you can, let me know how the audio is coming in for you. Hopefully it's okay. Harold B55, thank you. Appreciate that. Okay, so we'll get started. I'll just get a couple more sips of coffee, maybe a few more chugs of coffee, who knows? And I'll be with you guys soon. And Jerome Powell bringing on the pain. Let's discuss it. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly Sunday night, Monday morning live stream. Glad you could be with us. Quick shout again to all of you who made it here. Chris Clanton, how you doing? First time I've seen you here. Welcome aboard. If you are new, go ahead and type in new and where you're from, and we'll see if we can go ahead and acknowledge you. Henry, thank you. Appreciate that. Joseph S. Todd Baker. Let's see. Todd Baker, Peter just relented in milkshake theory. Okay, I haven't seen that one. Is Peter now saying the dollar is, as they say, the cleanest dirty shirt in the laundry basket? I mean, is what happened with Peter? He's relenting. All right, Peter. Good to see what he's going to say there. Let us know, Todd. Gilpit 581, Lubbock, Texas. How you doing? Joseph S. Yeah, I had to do something, right? I mean, yeah, it was time. It was time. Todd Baker, thank you, Mr. Nguyen. How you doing? Saying hello to Vincent as well. Vincent, if you're out there, how you doing, buddy? Thanks for keeping all of these things afloat. Five letter man, New Richmond, Virginia. How you doing? Thanks for joining us. Um, are you new to silver and gold? Just curious if you're new to it, or if you've been in it for a while, or if you're starting to hear things that are trying to get you to understand more about gold and silver and what they do, especially in these times. Carrie Ellen Wilder, how you doing? Noah's Ark, Dan Otness, Alaska. How you doing from Alaska? All right, one and all, greetings. Appreciate you being here. As always, you can find us on social media. Silverbullion.com.sg is our website. That's where you can find us on the web, silverbullion.com.sg. Yes, we do sell gold, silver, platinum, palladium, all those things. We do have our own vault. So for those of you that do have concerns about a third party vault, or if your dealer is not actually storing your metals and he's kind of shipping them out with someone else to store, give us an email. Send us an email, sales at silverbullion.com.sg. And more than anything else, we do specialize in systemic wealth protection, which is unfortunately it's on the way, gang. It is on the way. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL for Private Limited. It's where you can find us on Twitter. Silver Bullion SG, if you're one of those Instagram guys, that's where you can find us on Instagram or Instagram dolls. You can find us there. Audio only versions, SBTV iTunes or SBTV Spotify, and Crisis Tracker. If you have that Telegram app, or even if you don't, go ahead and download it. It's free. There's a desktop version, there's a mobile phone version. Go ahead and download that app, Telegram. Search one word, t.me and then crisis tracker. One word, crisis tracker. This is where Vincent and I we will go ahead and go through the news and try and find some news. Of course, it's credible, and then of course, if it makes sense to the majority of us, whether it's something to do with finance, economics, and especially gold and silver and current events. So do join that group. It's steadily growing. Go ahead and join it and leave your comments to some articles that we post. And again, I appreciate you joining the ecosystem, as they like to call it, and going forward with things. As we say, we're all in this same storm together. Some of us have yachts and some of us have canoes, but we're in it together. All right. So again, aloha one and all. Thank you all for being here. Upcoming guests, excuse me, it's going to be a first time guest. We've never had him on before, but I think most of you are probably familiar with this organization. He is Michael DiRienzo, Executive Director and Secretary of the silverinstitute.org. The Silver Institute is a nonprofit international association that draws its membership from across the breadth of the silver industry. This includes leading silver mining houses, refiners, bullion suppliers, manufacturers of silver products, and wholesalers of silver investment products. So again, I do hope you subscribe, hit that bell to be notified when this interview comes out, and thumbs ups are always appreciated, as are you, as are all of you. And we're going to go ahead and give our actually it's a $10 Amazon gift card giveaway. And to get this, you're going to have to answer. Be one of the first five to answer this question. You're going to have about a minute and a half. It's going to come from the Craig Hemke interview. Might be a little bit of a tough one. It's an unusual word, but be one of the first five to answer correctly in this live stream before the timer runs out. US winners are going to be given a link to download that gift card. Non-US winners can ask Amazon to exchange the gift card if it's not usable in your country, and provide us an email. Provide us an email during this live stream. No other messages in that email, just the email. And Vincent will keep track of it, and then we'll tally things up. And these gift cards will be given out at the end of the program. So quick look, quick look at the comments here. Yes, Vincent is saying go ahead and join our crisis tracker Telegram group, t.me/crisis tracker, one word. Okay, Throttle, appreciate that. I've been enjoying Crisis Tracker. Appreciate that. We enjoy actually digging through digging through the weeds and getting dirty and trying to find things that we can put out there. So we appreciate that. Let me get back to let me see. I think Todd Baker is saying Peter Schiff's latest podcast. All right, so I have to go and take a listen to that. And of course, Vincent is saying also hello everyone and welcome to the stream. So let me get to the question from Craig Hemke. Sorry about that, guys. It's not hard. You may get it, but question is the Fed is blank in their direct impact. The Fed is blank in their direct impact. And what this is when Craig Hemke was talking about the Fed's powers and the tools that they are actually blank in their direct impact. But then again, Powell did raise rates, and we are seeing that it is going to have an effect in things. He's talking about quite a lot of things, and we are going to feel some pain. But nonetheless, the Fed is blank in their direct impact. So go ahead and give it a try. Give it a try. Give it a shot. You never know. You may actually go ahead and get it right. Let's see what else is out there. Nevada, how you doing? Haircut, yes, haircut. Let's see. Truth Monster, impotent. David Honest, remiss. Rod Panhard, impotent, helpless, says Dave, says Ernest Blackmore. Dave Hilderman, late. They are late, that's for sure. Incompetent. Patrick Bateman, powerful. Henry, impartial. David also says a lot of you guys sing sing important without the R. Powerless. Let's see what else is out there. Clueless. Okay, desperate. Florida, how you doing? Reactionary, clueless, relentless. All right. The answer was actually limited. The answer was actually limited. I don't think anyone got it. Paul saying All right, Paul saying that word. Okay. Uh Sadly nobody got it. Was anyone close? Anyone close to limited? Let's see. All right. Okay, I guess that's it. So let's go ahead and check with Craig Hemke, this past interview that we've had with him, and see if he did indeed say limited.
Powell himself will admit that they only have a couple of things they can do, right? They've got maybe a dial on Fed funds that they can turn. They can increase the balance sheet, decrease the balance sheet. They can set up swap lines, and maybe turn on a repo facility or something like. But they're pretty limited in their direct impact. But again, everybody just goes off as if, and they seem to go off as if, well, we're going to turn this dial. That's going to make A happen. And then we're going to turn this one, and that's going to make B happen. And everything's going to be fine. That they can run rates up and then get to a point where they can run it back down and everything's going to be fine and normal again. And that's crazy. We're far more complicated than having it just be some binary choice like that. So anyway, I think people are figuring out that these central bankers are just simply tools of the politicians and the other bankers that run everything. And they're also figuring out that these markets, particularly futures markets, are absolute shams, scams, and frauds. And we're running into ultimately a crisis of confidence that is going to spiral out of control. And I don't know where it heads next. It's very interesting times lie ahead.
Whoa, Craig. They can turn a few dials and make things just fine. And I see a few of you folks already laughing out there. Peter Frohine, he's having a ball with this one. Turn a few dials. Sure. Turn a few dials. It's not as easy as a binary choice. This is true. We're people. We are complex. We are complex. As much as governments don't want to think so, we are actually very complex creatures. So it's not as easy as a binary choice. Central bankers are tools. Kind of had to hold back laughing when Craig said that because of the multiple ways you can define that word tools. But central bankers, they are tools. Futures markets are scams, shams, and fraud. Scams, shams, and fraud. We are running into a crisis of confidence. All right. What say you? I'll be looking for your thoughts. Are we running into a crisis of confidence? I mean, it's not just the whole monetary system that has to do. Uh, it's probably a follow up to confidence, or confidence will follow that. Where once we lose that confidence, that's it. That's it. There's no turning back. So I'll be looking for your comments. What say you, especially with the futures markets? Craig's opinion on that. So I'll be looking for comments and move ahead to his next clip.
When Volcker was in charge of the Fed in 1979 and 80, the U.S. national debt wasn't even $1 trillion. The annual deficits weren't even $100 billion. I mean, I remember when I was in college and in high school when Reagan ran it to $250 billion, well, Reagan and the Democrats in Congress, and people were freaking out. $250 billion annual deficits. U.S. GDP to the deficit was like 25 or 30%. It's 125% now. Again, what amazes me is this just keeps getting swallowed hook, line, and sinker, by the investment banks and the financial media. And maybe that's just because they are so incented to swallow it, because they're trying to keep all the plates spinning too. But what will happen again is, and it's not going to take 5 years for this to happen again like it did from 14 to 18. The Fed is just going to create a crash. Everybody's going to freak out. They'll be forced to start backtracking. The printers will come on again, and gold and silver will soar again, as they have the last 3 or 4 times we've gone through this. But man, for now, this is still pretty painful.
All right, Craig says U.S. debt in the 80s was less than 1 trillion, less than a trillion. Annual deficits were less than $1 billion. Can you imagine that? Annual deficits less than $1 billion. We're in the hundreds of billions now. Fed will create a crash. Now, this one, a bit controversial. I mean, some people, they absolutely do see this coming on. Fed will create a crash. Why? Why would they create a crash? And other people feel the Fed is trying to do the right thing. They're trying to do what, let's say, what Volcker did. They're trying to do the right thing and get things back under control and hopefully have that soft landing. So what say you? Fed will create a crash. Why? Gold and silver will soar again. that's a happy part in all of this. I know a lot of us are looking for gold and silver to soar again, but more importantly than price, we do understand it is a store of wealth. We do understand what gold and silver do in inflationary, stagflationary times. It's more than just price. So, what are your thoughts? I'll be looking for your thoughts on this as well. Let me take a quick look at the comments here. Uh, Harold B, is this true? I heard today that the U.S. Department of Agriculture wants you to register your garden on their website. I can't believe that. Is that true? Uh, I can't believe that one. That's really really stretching things if that's what they're doing. So hey guys, let me know. I'd like to know on that one. Okay, so let's see. James Bell, I lost confidence in markets in 2008 when taxpayers paid for the financial decisions made by central banks. You know, that one 2008 was rough because a lot of people, anyone and their dog actually, no disrespect, could have went and got a house. I mean, all you had to do was get a relative, go ahead and stuff some money in your bank account, and your mortgage officer, he would look at it and okay, you're good to go. And next thing you know, you got a mortgage for a home. But a lot of people, it was rough for them to maintain that mortgage. And again, as rates went up or as prices went up, they found themselves underwater and they just kind of got out of that home. And this is something that may happen again. They got out of that home, and all these companies that bet that mortgages were good, uh, they were wrong, but they took out insurance on that. So when they went to go ahead and get their insurance, the insurance couldn't cover it, and the whole financial system was basically unraveling. And well, we know what happened. We know what happened then. So, what are your thoughts on this? Fed will create a crash. One more clip from Craig Hemke.
I mean, why are gold and silver down? Well, the Comex contracts are getting dumped relentlessly every day by computers, mainly run by hedge funds at this point, that see the US dollar spiking up, and they see that happening, the computers do, and then they sell the futures contracts. Has nothing to do with physical supply and demand. And you think just even in the last 3 weeks, silver's gone from 21 down to 17. Whoa, down 20%? What, did a meteor hit the earth and all of a sudden the supply of physical silver went up by 20%? Has the demand for physical silver with solar panels and investment demand, has it gone down by 20%? No. It's all just run by the supply and the demand of the futures contracts. And right now, to almost historic levels, hedge funds are selling silver futures on the Comex, and price just goes down day after day after day after day after day.
All right. Comex is keeping gold and silver down. What say you? I'm gonna look to see what you have to say about that. Algos and machines control the markets. This is unfortunately true. I mean, there is a logic behind these trades, but it's no longer human logic. It's machine logic. Nothing to do with physical supply and demand. I know a lot of you out there feel this way, and you have strong feelings with what the Comex is doing. Now, almost all of us looked at the price to bifurcate between paper and physical. This has been going on for a while. We talked to people and we asked them what they feel about price, and they said at some point the paper price is going to have to separate from the real, true physical price. I say it's already happening now. We just don't really know it, but I do say it's happening now. When you look at premiums anywhere in the world, they're starting to get removed from the actual spot or paper price. So is this the beginning of something we will notice later on? Don't know, can't tell you. But especially in silver anyway, especially in silver, there does seem to be some sort of separation from that paper price and the physical price anywhere and everywhere in the world. So what are your thoughts here? Let me take a look at a few comments here. Let's see. Uh, Wow. All right. You guys got some good conversations going on there. I'll just continue with Gerald Salente's weekly message from his latest Trends Journal. The bug is over, is what he says. And we've taken a look at FedEx, and then we'll be taking a look at Argentina. So, Gerald, his recent Trends Journal says, welcome to this week's Trends Journal. The midterms are coming. The bug is over. President Joe Biden proved once again that the bug outbreak was never based on science and was always based on political science. Now, indeed, a man with zero scientific qualifications declared on Sunday the bug is over. This was Sunday of the other week. But that was the trend line since the politician launched the bug war back in 2020. According to Gerald, he says they made up these lockdown orders and imposed these draconian mandates that lacked the scintilla of scientific data, but destroyed the lives and livelihoods of billions across the planet. And if the bug is over, why are people still forced to wear their masks in school? Why are businesses and governments forcing people to get the hokey pokey and tested? If the bug is over, why are governments and the media selling the need to get the uh, the yearly um, the yearly bug swatter? Okay, the war, the Ukraine war continues to escalate, and rather than negotiating a ceasefire or talking about peace, the United States and its NATO allies continue to send billions of dollars. Excuse me, this was supposed to have. Oh, okay. I'm sorry, I'm still there. Still with Gerald here, sending billions of dollars to keep the battle the battles going in the Ukraine, and tensions between the U.S. and China are also heating up. This was the other week. China's Foreign Minister Wang Yi warned of an outbreak of a new Cold War will be a disaster for China and the US as well as other parts of the world. Could not agree more. FedEx, the economic ups and downs of global shipper FedEx are seen as harbingers of the world's economic future because the shipper carries almost every kind of product, and that future is not looking good. Last week, FedEx announced that it would stop hiring, close about 90 offices, cut its number of flights, and mothball aircraft because worldwide demand for shipping has fallen sharply. The company also announced its financial performance for the 3 months ending 31 August, posting revenue 500 million, 500 million lower than it had forecast, and profits just half of what analysts had expected. The FedEx cited global volume softness that accelerated during the period's final weeks. The company said as shoppers have switched from buying goods online to spending more on services and entertainment. FedEx Ground, the division handling most e-commerce deliveries in the US, saw revenues fall some 300 million short of the company's prediction because it expects the world's economy to weaken further. Now through November, FedEx also cuts its budget for capital expenditures and withdrew its financial guidance for the rest of the year and all of 2023. All of 2023. The company is aggressively accelerating its efforts to cut costs and boost productivity. And then there's Argentina. In August, inflation in Argentina reached 79%, its fastest pace in 30 years, and analysts the central bank surveyed said prices are likely to be rising by 95% at year's end. In response, Argentina's central bank imposed its ninth interest rate hike this year, adding 5.5 percentage points and setting the benchmark LEDIC at 75%. The rate has grown by 23% or percentage points, excuse me, in less than 3 months. Keeping with the country's interest rate of pace with inflation, is the key aspect of Argentina's $44 billion bailout agreement with, of course, the International Monetary Fund. And guys, this is not the first go around with Argentina and the IMF. They've been doing this for quite a while. The central bank has also intervened to bolster its peso's value against the dollar, which stood at 143 to the buck last week. All right. So Gerald laying it out there. Yeah, quite a bit of things to say, as do you. Let me take a look at these comments here. Um, let's see. Uh, okay, let me see here. Yes, Richard Martin, appreciate that. Smash the like. That really helps us out a lot. Peter for Hawaiian, do not trust any government agency, including now the U.S. We may as well call it the Dollar Association at this point. Okay, moving on. What else is out here? Um, yeah, this is Patrick Bateman. This is pretty concerning. European governments are going to have a bad awakening this winter, and it may be so bad that you may start to see the European Union start to have some cracks to split apart. You may see the Eurozone start to split apart. You may see NATO start to split apart. So that's a great comment there. Anyway, let's take a look at our weekly inflation treasury yield check. All right, so a gradual increase up and to the right means, hey, economy is good, things are great. Flat means optimism is falling, and inverted, well, means a recession more than likely is on the way. So here we go. Back in January, we still had that gradual incline up and to the right. February was the same, albeit rates are getting higher. And then in March, we start seeing 2, 3, 5, 7 years. They start to flatten out, even the 10 year. And then from May onward, they continue to flatten out, and we see the shorter end, the 3, 6, and 1 year, 3 month, 6 month, 1 year, start to get pushed up. And you can kind of see what happens then. All right. And so there we are in September. You can definitely see the inversion there. You look at the 1 year and the 2 year, and also three, above 4%. And you look at the 10, 20, and 30, all below 4%. So that tells you confidence is definitely waning, and expectations are this is going to go well into next year, the inflation numbers. So confidence is just not there right now. Okay, moving on over to our website, silverbullion.com.sg. Let's take a look at what's going on. Gold and silver price. Let me refresh this page. Silver down below 19 again, 1875 US dollars per ounce. Gold also down below 1650. It's now at 1641 per ounce. And this is really what we're talking about, because these are the times when you would or should be going into stores of wealth, things like gold and silver. Again, uh, anything and everything on here is not financial advice. It's just our opinion on things. So both gold and silver are down this morning here in Asia. Okay, so let's see. What do we have on sale for everyone? We still have 10-ounce Nadir bars and 1-ounce gold Britannia coins. Well, I guess this promotion was pretty good. We got cleaned out. But we are taking pre-orders. They're going to be a bit delayed due to the change of the reigning monarch. And what I've heard is there are even some dealers who have stopped selling these coins. They've actually stopped. I don't know why. If they think it's going to be some kind of a collectible. Talking about the Britannia, especially the Britannia. Not sure why some dealers have stopped, but okay. All right, gang. Britannias, gold Britannias. We're going to have to go and pick up some more. It's a good promotion. A lot of you guys got some good prices there. And the 10-ounce silver bar as well, out of stock. Okay, so I guess people responded. And these were available both in Singapore. You could pick them up. Or if you have a account with us and you are storing with us, you could have also bought that and stored it in the vault. Okay, so all right, that's pretty interesting there. Let me get back to some of the silver bars that we do have in stock, and particularly the 1,000-ounce LBMA bars. These are the bars, or the silver to get if you're looking for the lowest premiums. They do have you know a, a good price attached to them, but the premiums are low. So if you're looking to get silver, this is where you may want to be looking at. We have 3 at the shop you can pick up at Millennial Walk here in Singapore, and 334 available for storage. So if you have an account with us, you can go ahead and put that. You can store it. You do own it. Or if you don't have an account with us and you would like to start loading up on some silver, loading up on some gold, you can create an account. We have 6 types: personal, a joint, a trust account, a joint account with the minor, a business account, and the retirement account. As I've been saying the past few weeks, this retirement account, think of your precious metals IRA, think of something like your 401k, superannuation fund, things like that. You already have the money in that account. You already have it. And what you can do is roll some of it over into a precious metals account. So this is money you've already worked for, you already have. And if you know, as all of us do, the dollar is losing its purchasing power, and you're getting a bit older and you don't have time to make up for your losses in a retirement account, you may want to consider a precious metals IRA. And it does not have to be stored in the U.S. There's a myth to that, that the gold and silver has to be stored in the U.S. if it's a U.S. retirement account. It doesn't have to be. It can be stored in Singapore. We have numerous people who do have their retirement accounts with us. Easiest account to open again is the personal account. Basically, we just need some information, an ID, and fill out the application, and you're off. We can get the ball rolling for you, and then you can take advantage of the favorable jurisdiction that Singapore is. We do have quite a number of people who understand this. They see the value of storing in a neutral country, especially the way things are going. And again, as always, do put in SBTV. That helps us out a lot. So if you want to open up an account, or if you just want to talk to us about some things, see the programs we have for wealth protection, systemic wealth protection, shoot us an email at sales@silverbullion.com.sg. Moving on to Twitter. This one here, I won't play it, but the Fed has no choice but to raise aggressively, says economist Eller. I always pronounce his name wrong. Sorry about that. It's late, and therefore there will be collateral damage. This is the pain. This is the pain that they talk about. He says it's disturbing that those entrusted with delivering good economic outcomes are now saying they're going to raise unemployment. Are you guys hearing this? They're going to raise unemployment, and we'll take a look at that a bit more in the future. So this here, how much have other currencies depreciated against the US dollar so far this year? This is a pretty good chart, as long as it doesn't reload on us. So you can see in Jan, Feb, this is all this year. You can see the rupee, the Canadian dollar, Australian dollar. You can see a whole bunch of them, the Japanese yen, the British pound, Turkish lira. You can see how they're all losing ground to the dollar this year. And we know that because we're seeing the dollar getting stronger on the DXY. So a lot of currencies are losing ground to the dollar. And some of you, or one of you, mentioned about the pound. So the pound getting pounded early in Asia trading, where it opened at 0.8%. So even the pound sterling is losing ground to the US dollar, 107.88. This was 5 hours ago. Not sure what it is now, though. Dan Collins, Argentina peso at the start of the 2008 financial crisis was 316 to the dollar. Right now, it's 146.31. So this should kind of tell you where we are, where the world is, if you were to look at Argentina as some sort of a case. So it's right. Things are really, really getting, I don't know what's the right word here to say, but things are really moving, and not in a favorable direction. Doomberg, if you haven't had a chance, go ahead and follow this tweet that Doomberg put out. It's pretty long, but it's good. It's well worth the read. Steve St. Angelo, SRS Rocco report the exponential increase in the U.S. public debt is setting the stage for a massive collapse. Collapse in the debt, or in debt, will also trigger the subsequent collapse in asset values, most stocks, bonds, and real estates. This is why it is wise to own gold, and silver. A couple more things. This I'm not sure. I saw this late at night. I haven't checked on it, but there was some rumor, coming out of China as to what's going on there. I haven't followed it. It did seem a bit far fetched, but if anybody has new developments on us, just go ahead and let us know. Craig Hemke, TF Metals report. This just keeps going on. Another dot to connect. Now, Rungis, the largest wholesale fresh produce market in the world, is on fire. So here we go again. How many food plants, processing plants uh, have we seen catch on fire or whatever else? How many have we seen? It's just amazing. Nikkei, Asia. Good morning, Asia. This was our most read story while you were sleeping. This was back on September 22nd, though, where China cuts their U.S. debt holdings 9% in suspected shift to tax havens. What this is saying is that they are suspecting that China is going ahead and using or reallocating those assets, those funds into gold once again. And Gold Telegraph, the reach of Country R's alternative to the SWIFT international messaging system has grown at a record pace this year, according to their according to their central bank. So that was a look at Twitter. I'll end it there. Let me take a look at the comments here and see where we are at. Vincent chiming in. Hey, currencies in a great debasement race to zero. Absolutely. I mean, this is it is pretty serious, guys. You folks know that. We all know this, and this is why we are moving out of currencies, fiat, into real stores of value, assets that can hold value like gold and silver. And I would not worry about the paper price of what they are today because as things continue to unravel, as someone once said, it's like a beach ball. You try and you go to the beach with your beach ball and you try and submerge it, it just bounces right back up. It'll bounce right back up. And this is kind of what's happening. A lot of people do believe with gold and silver. So, you may want to consider moving out of some of those currencies, that maybe that cash you've been holding, and putting it into something that in the future does look to be that beach ball that is just going to really shoot up out of that water once things really really start to break. So yeah, it's kind of serious. Let's see. Again, Vincent asking Peter Frolwine, any thoughts on how the euro will go? A country to leave it. Um, and some people think the new. I haven't read fully into it, but I think Italy is having snap elections, and they feel that the person coming in, she may want to get out of the euro. I don't know fully about it, but if you know about it, let me know. Let me know what's going on there. Let's see. Um, Peter Frolwine is saying Germany will bring the euro down. Uh, yeah, we hear a mixed bag of stories with Germany, and you just never know. Sometimes news can be a bit sensationalist, so we kind of go with it a bit cautiously. But if you're on the ground there, let us know. Let us know how things are. Okay, so moving on, we are going to move on to the topic of the day. Fed still has the pedal to the metal, going too fast, too long. The Fed will get it wrong. Powell is bringing on the pain. He should be in the MMA, modern monetary. A word starts with an A. What say you? So I'm going to start off with what Jerome Powell said.
Running too high. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down.
Despite previous rate hikes, Powell noted that jobs remain unfilled throughout the economy.
So far, there's only modest evidence that the labor market is cooling off. We think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time.
All right. So Powell saying a few things there. Edited 3 months ago is saying there's some good news. Emergency services are going to get electric vehicles like battery operated fire trucks. Okay, this in Germany, or are you talking about Germany there? Let's see. Yeah, I know there's some rumors going on with what's happening in China. Um, okay, so let me get back to what Powell was saying. So the Fed raised rates 75 basis points or 0.75%. No news here. I mean, we all knew this was going to happen. The only question was really, is it going to be 75 basis points or 100? That was really the only question. And the effective funds rate is now at 3 to 3.25%. It was a 75 basis point hike. But my question to you is, he said this word, restrictive level. Trying to wrap my head around it. It could mean so many things. What do you think it meant? Restrictive level. When he said restrictive level, I'm waiting for your opinion on this. Let me look at a few comments here real quick again. Um, Let me see. Yeah, Vincent responding to Peter Frohwein. Alternatively, perhaps weaker countries will leave it to be able to debase their currencies. Asking a question there. Let's see. Okay, yeah, Mr. Nguyen, California to introduce 300,000 electric fire trucks. In California, I'm puzzled with California because I think, they're already saying that the power grid can't handle. It cannot handle the number of electric vehicles that they're trying to bring in. So I'm, really trying to wrap my head around California. Can they handle it or not? So I'll be looking for that as well. Yes, someone said here, food has a tendency to spontaneous combust. Well, you never know, but it does seem quite odd. So I'm looking for restricted level. Restricted level. What is out there? Um, all right. Okay. All right. So let's move on. So my question is, what did Paul mean when he said restrictive level? So let's start off by looking at the Fed funds rate chart because, as I've said, the Fed is doing something I don't think it's ever really done before, and that is raising interest rates at a time when bond yields are inverting. So let me move over to that Fed effective federal funds effective rate. So this is the chart, and you can see right now we are here we're here where we were back in 2019 when the wheels fell off. So we're right about at that same place again. So we'll see how it pans out this time. But if you ever been here, look at these charts. You can go to edit graph and then you can put in add line. And in this case, we want to look at the 10-year minus the 2-year, this one here. And then you can go ahead and add it in. Okay, so what happens is, let me clear this out. So what happens is now you have another line here to add on to this chart. So let me squeeze this down a bit. And you can see there were times where we had yield curve inversions. Anything under zero, this zero here, that means it's an inversion. So this is when the 10 and the 2 inverted. It inverted and you can see it plateaued and they had to come down. They had to bring the funds rate down. You can see here almost inverted, but they brought the funds rate down. And you can see here now we are definitely inverting. I showed you that chart earlier. There's no relief in sight. This is going to continue to invert. And it looks like the Fed is going to continue. We know they're going to continue to raise rates. So this is pretty spooky, and this is the pain. This is going to be the pain that Jerome Powell talks about because they've never really done this except, I guess if we like to get technical, maybe back in 1980-ish, around that time frame. We do see here that it did invert, and they were kind of running parallel with it. They were still raising rates. It did invert, but of course we know that was the time of Paul Volcker. We know how bad that went with stagflation. So the expectations of many people are we're going to see this stagflation again. So remember last week we talked about recent inflation numbers moving downward from 8.5 to 8.3%. And as I pointed out, nearly 300 million people are under lockdown in China, and the whole entire US population is 350 million or so. So you kind of get the picture. Imagine almost the whole US under lockdown. What would happen? Well, among other things, oil demand would drop. People would not be going to work. They're not commuting. They're not traveling. Businesses are slow, no real-time demand for new inventories, new products, new manufactured goods. Again, oil demand drops, the price for oil drops. And at the same time, with what we're seeing in China with the lockdowns, Biden's still drawing down on the petroleum strategic reserve. He's going to stop in November, though. But this increased the supply of oil, and this extra supply coming into the market also brought the oil price down. So we had two things here working to bring the oil price down, which end result saw the inflation rate come down from 8.5 to 8.3%. But as we talked about before, did your food bill go down? Did your rental go down? Did your mortgage go down? Clothes? Are your clothes any cheaper? Probably not. And this is why what the Fed is doing and how the feel good media, I'm just be straight here, feel good media covering for governments and central banks is becoming very, very disingenuous. And we got to know what to do. We have to know what to do, gang, because when the US stops dipping into that petroleum reserves, and let's say China opens back up, go back to work, that oil price is going to go back up. It's going to go back up. So I asked, has the Fed really done anything in the short term, maybe even in the long term, to bring inflation down? And I'm going to say no. I don't think they really have. Here's some numbers for you. CPI increases year over year. Fuel up 68.8%. Airline fares are up 33.4%. Piped gas services are up 33%. Energy commodities are up 27.1%. Motor fuel up 26.2%. These are all according to the Bureau of Labor Statistics. Now, outside of energy, what other things are becoming more expensive financially? Credit card rates. I'm sure some of you have seen that percentage easing up, gradually working its way up on your credit card. Auto financing rate, probably getting more expensive to get a loan to buy a car. Mortgage rates, especially if you have an adjustable rate mortgage, you're probably seeing that mortgage rate going up. If you're trying to buy a house, what was just a little over 2% last year is now some 6% or so. So mortgage rates moving up. Variable loan rates, anything with a variable loan, these are all going up, and our monthly expenditures, not even counting food yet, they're going to be going up too. Just saw another food plant burning down. So in this, Powell spoke specifically about the housing market, and I'll roll that clip. But let me take a look at what the comments are right now. Let's see. Bill Wood, avocados down at Walmart. All right. Okay, so some good news. Let's see what else is out there. Yeah. Yeah, Peter Froline again, appreciate it. I have a very bad feeling about October. Get ready. Red October. Wow. Okay. Bloodbath, McGrath, new records for the dollar. Was it 109, 110, getting up somewhere towards there. So dollar is, keep in mind, it's getting stronger against other currencies. Doesn't necessarily mean, its purchasing power is getting stronger, because you're still seeing inflation outpacing the purchasing power of the dollar. So, it may be, people may be thinking, hey, my dollar's getting stronger. That's good, but it's against other currencies that are going down, not against real goods that you're trying to buy. So always got to look into what we're seeing out there. All right. So this is what Powell had to say now about the housing market.
Have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues.
All right. So I'll stop there. We heard him say housing market needs to have some sort of a correction. So Paul says that there needs to be a correction in the housing market. I'm not claiming to be a real estate expert, but like you, we are experts in the state of being real. Maybe not a real estate expert, but we're experts in the state of being real. And we know the housing market needs to correct. There's no secret here. No secret here. I just want to put something that Vincent chimed in about where he was writing Silver Bullion's latest newsletter. And the US government has consistently reneged on obligations when they are faced with fiscal issues. Happened back in 33 and in 71. In both cases, currency holders were screwed. 33, we know what happened. Some people say confiscated, some people say expropriated gold. And 71, we know what happened where they temporarily closed that gold window. So anyway, Powell is now saying that perhaps there needs to be a correction in the housing market. So basically, this means the Fed, they're going to push the concept of trying to get housing to cool off. And part of it means homes may start to lose value as buyers are no longer willing to either pay the price a seller wants or simply cannot afford it anymore. Cannot afford that home with these elevated interest rates. As said, about a year ago, year and a half ago, mortgages were what, some 2%, 3% around there. Now it's over 6. So the pool of buyers is getting smaller, definitely getting smaller. And we talked about this before, because when one person sells their home at a lower rate in your area, what buyers are willing to comfortably pay, and then another and another does the same, the value of homes in your area will go down. So if you see people, they need to sell their home, sell some, if they need to sell their home and they take a lower price because, the interest rates are too high, buyers can't pay it, so that home price goes down, and another one does it, and another one does it, homes in your area start to go down. Let's consider something. If we have people looking to sell in a time where dollar confidence is waning, what will a seller accept as money? Is he going to want to take a dollar knowing the dollar is losing its purchasing power at a time when he needs dollars? Probably not, because he's going to have to sell that house for more, but the buyer can't buy it for more. So he's going to be looking for something else that he can consider an asset of stored value. And not just any asset, a monetary asset. He's going to be looking for some type of a monetary asset that people trust and know to be money and can also be a currency. I'm thinking gold and silver at this point. However, with what's happening, this could once again trigger another 2008 housing crisis. Absolutely, where people overpaid for their homes. Now, in fairness, in 2008 they overpaid, but today I don't think people overpaid. Well, maybe because of the high cost of housing, maybe they did a bit. But the thing was, they qualified this time and they could afford it this time. They could pay for it. But it's just that everything around them, and we talked about this before, everything around them started taking or coming into the income that they had, where they set aside a certain percentage of their income to go towards the home. But as food rose, as fuel rose, and other things started getting higher, the percentage that they set aside for their home became smaller and smaller. And so they're finding themselves having a harder time to pay that mortgage, pay that rent. So things are really changing here. So back in 2008, people overpaid. This time, perhaps they didn't overpay, but still, we may see people starting to walk away from their homes once again, or banks. You got to see this one now, because this is probably going to happen in a lot of places. Banks may simply say, "Sorry, Charlie, but we're going to change the rules. We're going to change the rules to the game." Let me show you what I mean. So something recently came out here in Singapore, because when that interest rate goes up in the US, it ripples all throughout the world. So now the Development Bank of Singapore, DBS, and UOB temporarily removed fixed rate home loans amid ongoing review. Banks have been making revisions to their home loan rates this year as global central banks embark on a rate hike race to tame inflation. So at least two banks here have temporarily stopped offering fixed rate home loans as of last week. DBS, Singapore's largest lender, has removed fixed rate home loans from its website. Channel News Asia understands that the local bank is currently reviewing its rates. Now, UOB, another pretty big bank here, said in response to queries that amid a rising rate environment, it is reviewing its fixed rate offerings and will be ceasing its existing 2 year and 3 year packages. So, I mean, what it's really saying is, banks are starting to have to, and I would say what these two banks in Singapore are doing, it's pretty responsible for what's happening in the environment. It's pretty responsible with what they're doing for the bank's end, but also for the people looking for loans, also from that end to make sure people don't really get underwater. But the thing is, could banks force people into only taking adjustable rate mortgages? This has been, I've seen other people say this before. Now, if they did, consensus is this is another death knell for the middle class. It's another death knell for the middle class. And then remember, Powell is saying we're going to experience pain. He's also saying that, and I'll roll a clip on that. But let me take a look at the comments here. Um, yeah, Vincent chiming in here in 33. They defaulted on gold clauses in treasury bonds. Bondholders could only redeem in devalued dollars, and in 68, individuals prevented from redeeming dollars for gold. So that's the other point to it. I tend to only think about the closing of the gold window, the gold confiscation, but those were some of the realities, as Vincent pointed out, that really did happen as well. So thanks for pointing that out, Vincent. Okay, so let me move on here. Something else that Powell said when he's talking about the pain.
Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy is improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs. And we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control. And that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year, expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
All right. All right. So key point here. Prices and wages need to come down. We can believe that. Prices and wages need to come down. Remember we talked about that wage price spiral. Well, Powell is looking at either the job market taking a hit or wages taking a hit. Do we understand the place of peril? The place of peril that Powell is actually taking us to, that he's actually putting people in. Before I go on, let me put another comment here up from Vincent. In 71 countries prevented from redeeming dollars for gold. This pattern will continue. Currency holders will be screwed again because it's the easiest solution to extricate themselves from debt. So there we go, talking about changing the rules, creating their own rules. Seems to happen throughout history when governments get in trouble. You guys already know about those 87,000 IRS agents. If the USDA wants you to register what you're growing, again, that's Banana Republic stuff. I don't know how else you could define it. So anyway, do we understand the place of peril that Powell is taking us to? Now his quote, "No one knows whether this process will lead to a recession, or if so, how significant that recession would be." Now, Chair Jerome Powell said this on Wednesday. That's going to depend on how quickly wage and price inflation pressures come down. Wage and price inflation pressure. So he's seeing wage pressures, meaning part of why we are where we are today is because it's your fault. You wanted a higher salary. So you wanted that higher salary. You pushed the prices of things up. And then you had to go back to your boss and say, "Hey, boss, I need a raise because things are getting more expensive." And then you went back into the economy, bought things again, and pushed the price up again. I'm not seeing this. I mean, I know it happens. That is the wage price spiral. But how you can equate pressures with wages and working people out there, doesn't matter. Working people, blue collar, white collar, you're going to take away their, or you look to bring down their salary. Unconscionable. It's just really unconscionable there. Now, what if prices do not come down and people lose their jobs and or wages do not keep up with prices? Now, that's not pain. Powell talks about pain. This is a world of hurt. And when I say world of hurt, literally, this is the whole world is going to be going through this hurt. This is just not some kind of a pain. But why would prices not come down? Well, it's very simple to me. I mean, consider the Ukraine war. We are talking about wheat, fertilizer, oil, energy, things like that. Food and energy, the things the Fed doesn't like to count those. No, they don't like to count it. The Fed cannot control this. And we've spoken time and time again how food supply is going down, food prices are going up. How does losing your job or taking a pay cut, how does this fit in the equation? And then, as mentioned early on with China and the lockdowns and the supply side of shirts in Walmart, cheap, accessible auto parts, etc., consumer goods, they take a hit on the supply side. Now, if there's less on the supply side, less inventory to sell, that inventory is going to be remarked with higher prices. They're going to bring out that little sticker gun and rearrange the prices a bit higher. Again, how does losing your job or having a job that does not pay enough fit into, how does it fit into this equation? It's a world of pain. It's taking us into definitely places of peril here. Peter Frohn, yes, this is a perfect storm. I hope you're ready. And I'm just going to say, when I say some of us have a yacht, the wealthy out there, some of us have a canoe, us guys here, or me anyway, it doesn't matter. We're all in this storm together. You want the best for your families. You want to protect your families. It doesn't matter whether you wear a blue collar or a white collar shirt, or a white collar shirt to work. And I know a lot of you guys are out there sitting on the fence trying to understand about gold and silver. Maybe you've gotten pretty wealthy over the years. You've made your money in other things outside of gold and silver. And now you're hearing all this talk about uh, stores of value, ways to hedge against inflation, and you're hearing things like gold and silver, and you look at the price and you see, well, this is not exactly maybe the best investment. The price always seems to go down. This is true. There are a lot of reasons why, but still, that's the investment side. You have to consider the insurance side of gold and silver. And again, this goes from everybody from yacht to canoe. Consider the insurance side of gold and silver. Once you do, you may appreciate those lower prices just a bit more, to accumulate just just a bit more. So anyway, how do lower wages fit into the equation? Really, it doesn't. It doesn't. And we're going to see people taking two, taking three jobs to make ends meet. And they are glorious politicians all throughout the world. They're going to say, hey, look at these unemployment numbers. They're coming down. People are taking jobs. Well, they're taking two or three just to make ends meet. We are creating jobs to get people back to work. They're going to say, no, they're having to take two and three jobs just to make ends meet. So with the supply side problem of inflation, both food and energy, everyday supplies of sustenance are they're not in Fed control. You have to imagine you may be living in a world where jobs are scarce, supplies around you, not enough, where their prices do the opposite of coming down. They end up going up. And your money is disappearing. It's disappearing fast. So what Powell is saying is this: the chances of a soft landing will likely diminish in pursuit of restoring price stability. He's out to save the dollar. He may not be out to save you. He's killing the middle class, save the dollar. That's all there is to it. In the meantime, governments will pander and say, look at all the people. The Inflation Reduction Act has got back to work. Let's not be fooled. Let's not be fooled. People are taking multiple jobs just to make ends meet. With words like that, it makes me think of that interview we had with Ali Shahadi as to what was going on in Lebanon. And what did we learn? It was a product of corrupt politicians, corrupt monetary fiscal policies. Kind of sounds familiar. And if I look at the possibility of a systemic breakdown coming into play, I'll refer once again as to what's going on in Lebanon. And sadly, we see things like this. Lebanon's Wonder Woman in hiding after bank heist. Okay. Salih Hafiz has been lauded as a hero in Lebanon after she entered a bank with a replica gun and demanded money from her own account to help treat her sister. Treat her sister, meaning a medical condition. So she has not been seen, or she has not been seen, her friend says, for a few days, not since she entered the bank, and she demanded her own money, and she instantly became famous across Lebanon with her defiant image broadcast around the world. The friend, who didn't wish to be identified for security reasons, has brought a cake to Sally, who, while she was not arrested, she's now in hiding. And they're looking at her as a hero. All she wanted was to get her money. The bank wouldn't let her get her money, and she needed to take care of her sister. Um, so basically, that's the story, and it may very well get to a point where people like Sally will be forced to do things they would never otherwise do. You'd never otherwise do or even consider these things, because we want to withdraw our money from a bank account and the bank won't let us. And we know there are things such as bank holidays and bail-ins which are set to go. Or maybe it's because they want us to feel some pain now, so we transition over into a CBDC. Who knows what is the real thinking behind all of this here? Basically, just take one for the team. That's what they want you to do. Get out there and take one for the team. What is there to complain about, right? Right. Anyway, that's the topic of the day. I really want to look at your comments here. Um, Let's see. Harold B. Chicago, Cook County, giving universal basic income from 500 to 3,200 a month to anyone with income under 275% of federal poverty level. Citizenship not an issue to apply. Serious, Harold? You don't even have to be a citizen, and you'll get that. I mean, wow, is that where we are? And I saw somebody saying the USD, the DXY was 113. Um, it's really unraveling. I mean, keep your head on a swivel, as we always say. So I can't believe that Chicago, huh? That's definitely different. And Lieutenant Colonel Brumley, nobody talking about the interest payment on the national debt with interest rate hikes. I saw something. If it gets to a certain point, I think we're only going to be paying off the interest. We're not even going to be making a dent in paying down the national debt. We're getting to that point. And again, that's Banana Republic stuff. That's, I mean, Banana Republic stuff for sure. Let's see. Let's see what else is out here. Balloon type loans, yeah, those are always dangerous. They're easy to pay on the front end, and once you start getting to the back, yeah, it's you can lose almost everything you put into it. Um, let's see. Let's see. Okay, comments look pretty good here. Okay, let's see. Vincent, chiming in for the lieutenant colonel. You're right, but what no one is talking about, because no one has a clue, is how the national debt can be repaid. If you go to the US Treasury fiscal data website, they acknowledge that the high debt is bad, that the debt is getting out of hand, debt to GDP, of course, and that the cost of servicing is getting more expensive, but nothing about repayment. Nothing about repayment. Hey, the interest is getting more expensive, but they're not even talking about repayment. So, Vincent, thank you. Uh Again, it's really Banana Republic stuff. I mean, at some point, you know, it's hard for people to understand the condition, the fiscal condition their country is in when their country is giving them money. Uh, when the country is really giving them money, they will never understand the true fiscal condition that their country is in. Pandering, it's incredible. Vincent, again, the fiscal data website actually says, simply put, the national debt is similar to a person using a credit card for purchases and not paying off the full balance each month. That's what it is. Uh, I guess you could liken that to, I remember a teenager way back when I got my first credit card. It was a Sears, a Sears credit card, and the minimum monthly was $10 a month. That's all you had to pay, $10 a month. Somehow that $10 became more and more difficult to pay, or if not difficult, somehow you would skip it. And you're a teenager, right? You skip it, you go out with your friends or whatever, and then that thing gets big, real fast, real quick. And this is what's happening with the debt. It's getting to a point where you're lucky if you can even pay off the interest. And again, that's man, okay. Let's see what else is out here. Did Powell just say the Feds serves the public? Okay. Well, I tell you what. I mean, you guys have some great comments here. I appreciate. Okay, Lieutenant Colonel saying $14 closing in on 114. I, that's just crazy. If it gets to 120, I'd imagine you're gonna have 1-to-1 parity already with the pound. I mean, at least. So, I mean, milkshake theory, dollar milkshake theory. Brent Johnson looks like he's got it right. I know a lot of people are kind of laughing at that one, but sure looks like he got it right at this point. Okay, what else is out there? Let's see. Okay, let me move on. You guys are great, and I hope that for the new guys who are listening, you're paying attention to these comments, because I think we got some of the smartest guys out there who chime in. Um, as I say, your comments, what you put, means more than anything that I can say. So if you really want to help these guys out there who are on the fence, keep coming with the comments. Let them know why you're doing what you're doing. We let people know why we are doing what we are doing. More importantly, the reasons why, things maybe we didn't consider, things maybe we didn't see. So with all of that, I'll move on to the commentary part here. So with these truths out there, or out here, these numbers are, they're not going to come down. They're not going to come down. And the Fed, in what looks to me to be the first time in its history, raising rates in a time where there is a yield curve inversion, which almost always signifies a recession is coming. I don't even know if in the news they're even saying we are in a recession. I don't even know if they're saying that. Uh, but it looks like the economy is going to get steamrolled. It is just going to get steamrolled. People are going to get flattened. Gold and silver, they do well in a stagflationary period or with what's coming ahead. Brother, sister, you and I are going to need insurance like never before. Systemic wealth protection with things like gold and silver needs to be on everyone's checklist. I know there's a price. We see the investment side. Try and look at the insurance side. And once you understand the insurance side of gold and silver, you may actually like the investment side where you can go ahead and accumulate more. It's all going to happen. It's going to happen quick. And I'll go back to 2008 when they told us, within 2 days the whole system was going to melt down. So in other words, if they couldn't fix it, they weren't going to tell us, and everything was going to melt down. Well, it seems like we're at the same point again. So consider things like gold and silver. Am I fear mongering? Nah, I don't think so. I mean, just look around you, and that should already, I hate to say it, but it should already put some fear in you to do something. Do something. You have to see what's going on around you at this point. Because when gold and silver futures, the paper markets, which Craig Hemke and many others call a sham and a scam, controls the physical price, people may be receiving the wrong signals and not doing the best things possible for themselves. People don't buy when they should be buying. What do you say? Is it time to buy? One last thing to sum it up. One last clip here.
Because you've been watching the bond markets for a very long time.
Yeah, it's not only modern monetary theory. It was never a good idea. It was a stupid idea, and we're seeing living proof of that. You can't print forever and think you can get away with it. Look at what the pound's doing. But I think if there's a lesson to be learned here, it's the fact that central bankers in general and governments in particular have this unique relationship that we need to find a way to separate. And it isn't necessarily a political relationship. It's an enabling relationship. They are enablers. By these low interest rates and hanging out at zero for so long, they allowed governments to do anything. They allowed companies to remain that should have died. They ruined the entire infrastructure of global finance. And to think that it's going to come together easily, or if central banks have any plan, there is no way to put this Humpty Dumpty back together. There needs to be lots of financial destruction first, and from that, the Arizona will rise. The best fertilizer for the global economy right now is for all of these issues, whether it's foreign exchange, government debt, corporates, all of these financial instruments have to be pushed down to some level that represents true risk to value returns versus the pie in the sky valuations and returns that many were getting with virtually no risk.
All right. And that's coming from mainstream. That's coming from mainstream media. So that'll wrap up the commentary part. So you can see, Powell is going to bring the pain. He's not even hiding it anymore. He's going to bring the pain. Mainstream media is even letting you know that there has to be pain. We've said a long time ago where when the Fed put that punch bowl in front of Wall Street, they couldn't take it back. And we've said how, worse yet, when they put it in front of Main Street, it's going to be very difficult to take it back. And now we're seeing how they're going to take it back. They're just going to pull it, and they're going to put you through the pain. I don't think Wall Street will get as much pain. I don't know if the Fed will backstop them the way they did, but you think the Fed will backstop you? You have to backstop yourself. Make sure you get some gold and silver. Make sure you have food and all these other things. So anyway, it's been quite a while taking up your time here. I appreciate you being with us. Thumbs ups. We greatly appreciate those. They help us tremendously. I hope you had a chance to watch that Steve St. Angelo interview and the Michael DiRienzo interview coming up from the Silver Institute. And again, if you're an older guy like myself and you've got these retirement accounts, 401ks, whatever it may be, self-directed accounts in Australia, superannuation funds, all these things, do consider a precious metals IRA because your currency is going to lose purchasing power. You want to be in a store of wealth when these things really happen. So we can help you with that. Just contact us, sales@silverbullion.com.sg. We'll let you know what you would need to do. It's simpler than you think. And like I said, you already have the money. The money is already sitting in your retirement account. So it's not like you have to go and pull it out of your savings, pull it out of your wallet. It's there. That's your retirement. So it's there for you. So with that, I'll take a look at a few more comments. Um, let's see. Vincent chiming in again. Currency holders guaranteed to be screwed. It's not just an opinion. It's not just an opinion. History has shown that this most likely will happen. Completely agree, Vincent. Well said. Well said. So if you're not listening to me, make sure you listen to Vincent. He's the brains behind everything. Make sure you listen to Vincent as well. So let's see what else is out there before we wrap up. Let's see. Built for tough. Wall Street doesn't like the dollar this high. Probably not. I'm sure they don't. Let's see. John asks, what happens to mining stocks if currencies collapse? That's a great question because you got to you're going to have to make a decision, when it comes to miners. If the markets collapse, do you think the miners will go with it, or do you think the miners will actually go up as the markets come down? So you're gonna have to make a decision. If I simply look at it this way, I mean, if you want to do it, go ahead. But if you want gold price exposure or whatever it is, just simply get the physical. I mean, there are premiums now, but I'm sure these premiums they'll be made up. As we move forward, I'm sure they'll be made up. Silver has a ways to go, more than gold, but I'm sure that these premiums, you'll pay the premiums now, but I'm sure that they will benefit you later. That you'll just be able to have some gold and silver in your name. But that's a great question. I really can't answer it. I just say if you really want the exposure to the metals, just get the metals. Because when you buy miners, you're buying management. I'm not knocking on miners, just saying for me personally, I'm safer with. I feel safer with just getting the metals. Let's see. Yeah, Patrick Bateman, dollar milkshake theory. Brent John, that guy, he nailed it. I mean, I know he got ridiculed a lot. Uh, looks like he nailed it, Brett Johnson. Okay, so with that, I guess I'll be wrapping it up here. Let's see, one more. I'll throw one more in from Vincent. Uh, Gold and silver never does anything because they are not living things. It is always what man does to them, but humankind always runs back to them when push comes to shove. That is true. It somehow gold and silver they're just built into our DNA. And I think because of that, that's when people are going to say, "Hey, I need some type of a monetary commodity, perhaps," and they're going to look at gold and silver for sure. Okay, so we'll be wrapping up. We'll be wrapping up this program. I thank you all for being here again. If you have these retirement accounts, do consider a type of a precious metals IRA, self-directed IRA, because I think it's probably the time you really want to be considering it or moving into it, or at least partially going into it. Again, we can help you with that. Um, Storms coming. We all know that. You might be in a yacht. You might be in a canoe. We're in it together. Be a blessing, not a burden. We're going to have to help each other through this for sure. And as I always say, saddle up for what's coming ahead. Silver up as well. I'll see you guys next week. Take care of each other.